Okay, so now we come to the financial statements. I'm going to leave the Preseen document and jump to a document that the CIMA Hub has put together analyzing the financial statements and giving it a little bit more depth in terms of analysis. We see the percentage changes and some of the ratios associated with the financial statements. But these are the exact same figures we're going to see in each of the financial statements that appear in the Preseen document. So we start with Mavis Venderby's statement of profit or loss for the year ended 29th of February. And what we have, of course, is a comparison between 2016 and 2015. So, looking at the statement of profit or loss, the first thing that jumps out, of course, is that revenue is down. Never a good thing. Okay, it's down by just 0.3%, but it's down nonetheless. So almost flat, but slightly down. The cost of sales are actually up slightly, almost flat, but up slightly. So that's a slight concern. And the gross profit as a result is down by 3.7%. So we're off to a bad start. But really what's very concerning is the operating costs that I see over here. Okay? Because what we see is they are up almost 20%. So these are costs that include marketing and sales, distribution, administrative expenses, etc. So this is potentially a very big issue. If the costs keep rising in this way, Mavis Venderby's profits are going to be whittled down to nothing. We have another interesting item before we get to the operating profit figure. Here, we have an exceptional item here. We have a profit on disposal of property, plant and equipment of $864,000. So, what we find later on is that this has actually inflated the net profit for the year, which we see is actually up. But without this profit on the disposal of property, plant and equipment, the net profit would be quite significantly down for the year. So it's kind of saved Mavis Venderby in 2016, this disposal. This disposal is related to the move from their old premises to the new premises. Okay, so it's really an exceptional sale. It's not going to save them every year. So it slightly skews the figures, and we need to take it into account. We see that there's a finance cost, just $48,000 $. This is the first time it seems to be appearing, so we can assume that Mavis Venderby has taken on a loan in the last year. We'll see that in the balance sheet. And we come to the net profit figure, which is slightly up on last year, but as I said before, without this disposal, this exceptional disposal, we're going to have a seriously declining figure. There would be a decrease of 22% in the net profit figure if the net disposal, if the profit on disposal had not been recognized during 2016. So the net profit figure would have been $1,535,000 without the profit on the disposal of property, plant and equipment. That will tell you that things have been moving in the wrong direction for Mavis Venderby in terms of performance during the last year. The revenues are flat. The operating costs are maybe spiraling out of control. They need to get those under control very quickly, and that points to some problems. What about the statement of financial position? And what we see, first of all, are the non-current assets, and property, plant and equipment has increased quite significantly by 54%, and that is due to the move to their new premises in 2016. Inventory. We've been talking a lot about inventory in the current assets section. We have our fears confirmed. We wondered whether this even production throughout the year, even though it was an up and down business with cycles, the fact that they had this very long lead time, which was influenced by the long drying period at the very start of the production process, the fact that they're buying in bulk, etc., etc. Is this going to lead to problems with inventory? Yes, it seems there are problems with inventory. It's up 24% over the year. We'll see the ratios, the inventory days ratio is going to verify that shortly. And the final section of the current assets shows us that cash has declined by 54% in the year. This is a worrying decline in the cash position, and it means that Mavis Venderby is actually unable to meet its short-term obligations with cash alone. We'll see the current liabilities section in just a minute, but the cash does not cover the current liabilities. There's a problem here with liquidity and cash. Just focusing on the inventory for a second, what could Mavis Venderby do about inventory? There are a number of things. I mean, it seems to me that they have clear problems with inventory, but a lot of these problems could be easily solved. A little bit more professionalism, maybe the recruitment of some knowledgeable people from other industries who have dealt with similar issues would serve Mavis Venderby very well. They could consider, of course, the following methods. I mean, lean production is a philosophy that the company could try to take on board to eliminate and to minimize waste. They could remove non-value added activities such as drying. Why not buy the wood in already dried form? Presumably that would be more expensive, but they need to weigh up the costs and benefits of doing that. This kind of lean approach to production would also minimize the defective units that they're taking on board. They could inspect the wood upon delivery rather than looking for faults at a later stage, which we saw is what they currently do. The economic order quantity. Here they could try to establish the optimal order quantity, and to take that into account, this would help with inventory undoubtedly. The just-in-time method as well. It's a zero inventory type of method. You would have all staff involved in this process, ensuring that defects, etc., are kept to an absolute minimum. In general, I think they could get forecasting of demand a lot better. They know that it's a very cyclical business. They know that there are just 5 months in which most of the demand is coming through. It shouldn't be rocket science to have a better understanding of demand patterns and to tailor their production to meet those peaks and troughs in demand. And finally, they could demand more of their suppliers, get closer to them, literally have their suppliers closer to them in order to cut down transport times, in order to maybe implement this kind of pull system for demand rather than pushing things through and waiting for demand from consumers to send stuff out. They could have a pull system whereby the customers demand first, and then Mavis Venderby responds to that by producing what has been demanded. That, of course, would require a very effective, orderly, efficient supply chain with partners being close to each other and being very speedy in responding to demand. But there are a number of things that they could consider to cut down on their inventory. Moving then to the equity and liabilities section of the balance sheet. Retained earnings is up by 24%.